Good morning, everyone, and welcome to another episode of The Early Bird. Today is the 8th of February, and there are a few things on the headlines. So to keep it short and sweet, I just compiled down to four main items that we'd be talking about. First of all, the Walt Disney Company. So, the Walt Disney Company has suffered a beating due to the coronavirus, as its main source of their income, such as cinemas and the Disneyland theme parks, are forced to close or open at limited capacity. However, the streaming service, Disney Plus, regaining ground for the company as resources are being allocated to drive content creation for the platform. Now, in December 2020, on the Investor Day, Disney showcased a slate of anticipated series for their Marvel Cinematic Universe, Pixar, and Star Wars branches. With travel restrictions and social distancing at play, filming on location could be a logistical challenge, but not so much for animated movies. Luckily, with Pixar's track record of creating animated hits, Disney will still have at least one avenue for content creation for its Disney Plus platform. With less expense on travel due to restrictions around the world and government stimulus packages and people's needs for entertainment in home, especially in such dire times and constant bombardment from the news outlets, streaming platforms like Disney may become beneficiaries of the extra cash. Analysts are expecting a huge growth in Disney Plus subscribers from 85 million in December 2020 to 95 million on Thursday's announcement. So one analyst has upgraded the company's recommendation from sell to neutral. However, earning per shares is still expected to be down by 33 cents. So what we can see here is the share price of Disney since the pandemic started, and it has rebounded quite nicely, almost doubling what it was before at its bottom. Next item on the agenda. Okay, so we're talking about individuals investors or retail investors are back. Now, with the lockdown and stay-at-home orders are pushing people into the stock markets either because they are bored or simply they want to find another way to make money. Now, with Google Trend showing a surge in the search term day trading and the Gamestop phenomena are dominating the headlines, retail investors and traders are coming back into the trading scene. That being said, those who enter the game, that is the stock market, for the reason of GameStop might find themselves quite burned and leaving the surge short-lived. And here we have the chart of GameStop going from its meteoric height of almost $500 or so and going down to $63. So that's a serious drop in price. Now, despite all of this, GameStop phenomena had the big institution reassessing the power of the little guys, air quotes, as institutions shorting stock experience a very expensive short squeeze. Overall, the stock market is getting unprecedented attention, and with little alternative, there is a bubble-like action that is happening. Historically, however, stocks have always outperformed other instruments most of the time, but getting into stocks still depends on the individual's appetite for risk. Now moving on to our third item, which is Westpac Reinventures, which is Westpac is the bank, and they invested in Coinbase, a decentralized financial service that focuses on cryptocurrency. Coinbase is eyeing an IPO on the Nasdaq in the coming weeks. One of Coinbase early investors, which is Westpac, is expected to reap $300 million in profit from the rumored valuation. Now, it is uncertain if Coinbase IPO will affect Westpac's share price, but it will definitely boost the bank's balance sheet. So here we have Coinbase website and the Westpac. Westpac is the company, the bank, and Reinventure is the capital venture firm. And the last item for today is Zip. So one of the rivals of Afterpay. Now Zip, the pay now buy later company is looking for the US market for a secondary listing. So it is currently being listed on the ASX, and you can see the chart here on the right, and the left one is Afterpay. And it's looking to get a secondary listing on the American market, and it's almost kind of like wanting to play a catch-up game, because there is a huge difference between the valuations of the two companies. And with a successful listing, its share price on the ASX may also see a jump, because it is now, if it gets listed on the US stock exchange, it is accessible. It is in there's more capital for it to access. And at the moment, it is trading 12 times the forward revenue. However, that is relatively cheaper than Afterpay by at least 3 times. So what we can see is the share price of both buy now, pay later has surged since the pandemic began, and Afterpay has been on the news as the market darling since it rose so significantly. But it has retreated a little bit and kind of testing the top of this range right now. If you like what you see, please share, like, and subscribe to stay up to date with what's happening on the news. I will be doing an episode of The Early Bird every weekday morning. Thank you so much. Have a great day. Bye-bye.